Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey, good afternoon. This is Tuesday Tech Talk. I'm David Blake, and we're just going to quickly review a little bit of what's going on in the last week or two. Look at some different charts about some different sectors and indexes, see where we might be going over the next few weeks, and basically see if we're in line to have a Santa Claus rally this year, especially after the big rally we had over the last 6 weeks or so with the market jumping up about 12 or 13% off the August lows. I don't know what it is about these Mondays. Every night when I prepare our Tuesday talk, the market seems to go in the exact opposite direction of what the previous week was setting up, even when it gets bad news. Of course, we had the horrific events over the weekend in Paris. A lot of traders and investors came in thinking that we would probably see a big drop in the market and a big spike in oil. Just the opposite happened. We got a big rally, broad-based rally yesterday, and although oil did go up about, I guess it was up almost 3% yesterday, that was actually quite a muted response to the terror attacks we've had in the past. A lot of times, I think just a couple of months ago, when something like that would happen, you would see the crude oil jump up 9–10%. And we've already seen a pullback today. The energy sector is the only sector today that's lower. I think that just also has, number one, it has to do with the stronger dollar. Number two, again, it just goes with the oversupply concerns. Okay, last week the Dow fell about 3.7%. The S&P was off 3.6%. The Nasdaq and Russell 2000 were off more than 4%, almost 4.5%. Every single sector was lower except for the utility sector. Interestingly, the Market Edge Momentum Index dropped to a -9 from a neutral -3 the week before. Internal breadth was pretty ugly. The NYSE AD line dropped about 4,500 units, same with the Nasdaq. And both the Dow and S&P 500 slipped below their 200-day moving average. We saw the transports and the Russell 2000 actually fall below their 50-day moving average. Number new 52-week lows beat the new highs every day. They were in triple digits, and on Friday we saw those the new lows hit break over 200, which is the first time that's happened in let's see, probably actually since that's the most since August, is that one day. So that was weakness, broad-based weakness. What was troubling though last week was that we saw a nice pullback in the Nasdaq 100. The Nasdaq 100 actually made a new 52-week high, new all-time high, just about a week and a half ago off of the August bottoms. So that kind of showed you that the rally off the last couple of weeks was a little bit thin, but you wondered how that may be what indicates whether or not we're going to have a Santa Claus rally or not. Yet we saw a pretty good pullback of that index on Friday. Yesterday it had a nice bounce. But that index, we'll take a look at the chart later on. But that probably holds the key to what we want to look at. Okay. That actually, when the events happened over the weekend, the futures were down Sunday night when I looked. They were off a couple hundred points. Things turned around. Let's see. The energy sector was up about more than 3%. Crude oil was down early in the day, turned around midday. I think once they saw that the market was going to rally, they came in and bought that. So was yesterday actually the kickoff of the Santa Claus rally? I think we'll have to take a few more days to see how this leg up plays out, but I don't want to rain on anybody's parade, but I'm a little bit skeptical of how much further we have to the upside. While we did see rally in the jump in oil stocks and all, I'm not sure that offset last week's retail wreck. Okay. First one I want to look at is the Dow Jones. You can see last week's sell-off brought the average right down to the 38.1% retracement level of the bounce off of the August lows. That's a significant area of support. I don't think it's likely to hold. Today we're getting a little rally. We're going up here testing the 200-day moving average, which is right around 17.6. We're at 17.592, up 109 points today. So if we're going to stall out, this is probably right about the point where we can start to see the market kind of roll over at this point. We'll have to see. I noticed transports are starting to pick up some steam. They kind of had a rough day yesterday because you had a lot of selling in the transportation stocks of the travel industry, like the cruise lines. Delta was down pretty big. Even Priceline was off pretty well. But as you can see over here, we're still negative on the MACD for the Dow, and we'll see if I kind of think if we do start to roll over here, maybe if the selling doesn't, if this rally here today doesn't hold up to the end of the day, if we start to sell off a little bit, I think you can probably go down here and at least test this 16.8 area, which would be a 50% retracement of this whole move off the lows. Okay, next one we want to look at real quick is the S&P 500. It's also testing it actually went positive today for the year, which is a little bit surprising. It's at 2065. That also is right where the 50% retracement comes in there. Actually, the 50% retracement is 1990, but that's where the 200-day moving average is very close. So the S&P 500, I would think if it's going to stall out, it'll stall out right around here, and then if it does, we'll come back down here and maybe take a little look at the 1990 area around the 50-day moving average. Nasdaq's outperformed a little bit better. Another bullish engulfing candlestick pattern. It's back up above the 50-day. Although you see the MACD short term is bearish. 47.20 would be the 50% retracement level on this index. That's somewhere right around in here. I think we'll probably at least test the 50-day moving average on that. The Russell 2000, you can see it's underperformed over here, especially the last week or so, being down 4.5%. It's a little bit more interesting of a chart. This recent rally stalled at the 50% retracement of the total move down from last July down to the low in September. Okay, this is right around the 50% level, and that's where we kind of stalled out. Today it's up about 9 more points. It's coming up, getting close to the 50-day. It's above the 50-day now, but we're right at that 31.8% retracement. So we want to watch that. It's underperformed, and if this thing's going to have any legs, we want to see more participation on the small caps. Okay, here's the Dow Jones Transports. This also has kind of a little bit worrisome. You can see the trend line going up here, going back from the August lows. It broke below the 50-day moving average last Friday. We had a bounce on yesterday where it came back above that point, and today we actually are a little bit above the 50-day moving average. We'll have to see if that holds, but you've got a lot of stuff going on right here with the support levels at this 8,000 level. I think if we see the transports break below that 8,000 level, like it did early yesterday, that would be another red flag for the broader market. Okay, finally, we want to look at the Philadelphia Semiconductor. It pulled up, ran a resistance up here at the 68% retracement level on the total move back. We're down here struggling to hold this 50-day over here. It is actually, let's see if it's up today a little bit. Yeah, it's up 1.5%. So it's bouncing off this 50-day moving average. We'll see if it can hold up here around 660 would be the resistance level for that. Slip below 630 would be negative for the overall market and also for the technology sector. Okay, one last slide here. And this is the Nasdaq 100, which we talked about a little earlier. You can see off this August low, it actually broke out to a new high. What's kind of crazy about this thing actually, it's made up of Facebook, Amazon, Netflix, Apple, all the big name tech stocks. This index hit a low of 37.87 back here in August. The new high was 47.37. That jumped 950 points in just over 10 weeks. That's 25%, which is it was more than due for a pullback, and we'll have to see how it does. Now, this I think is going to hold the key because the outperformance, you can see that this actually pulled the other indexes up with it. That showed that this rally was getting a little thin, long in the tooth, and less stocks participating. If this thing actually has another, if we roll over a little bit here, you want to watch this 50-day and 200-day where it looks like it's getting ready to cross over. That would spell trouble for the overall market because this index is what provided an awful lot of the gains on that move up. It's kind of one of those things where when you're in a strong trend, the strong trend will lift, rising tide lifts all boats, and this certainly did over the last couple of weeks. But it just started to roll over. It's especially hit the Russell 2000 last week pretty hard. So a lot of those companies like Facebook and Apple have already reported earnings. Does it have a catalyst to move higher? I'm not so sure. Okay, real briefly, we're going to look at the AD line. Again, you saw that rolling over pretty good. So yesterday's advance, for as big of a move we had, the AD line wasn't quite as high as you'd like it. About 22 to 9, just a little bit over 2 to 1 advance declines on the NYSE, and not even 2 to 1 on the Nasdaq. Advancing volume was about 80% on the NYSE, but only about 68% on the Nasdaq. And I wanted to bring this up. More than likely, we wrote this in the daily comment last night, that the reason we got the bounce yesterday is that, number one, a lot of traders and investors are looking at thinking that the terrorist attacks over the weekend are probably going to increases the odds that the ECU will expand its quantitative easing program probably sooner than later to keep the European economy from slipping maybe into a recession. They're also hoping that perhaps the Federal Reserve might take a December rate hike off the table. Not sure how that's going to play out. As you know, when they didn't raise rates before, the market sold off pretty heavy. And I don't know that if they decide to delay again, if investors might not get nervous again about that. But we have about 2 or 3 more weeks of data to come out before the Fed has to make a move. Strong data. I think we get back up there. The CME group, FedWatch, has the Fed likelihood of it moving up at about 63% today. That's down from 70% on Friday. We get weaker data. That causes the Fed to push out interest rates till 2016. I'm not really sure how the market will react, but I think it's prudent that you kind of go a little bit of a sideways here. Like I said, the rally that we had off of the dead cat bounce, or whatever you want to say, is probably just about running out of gas, right about where we are currently. We're up right at that 50-day moving or 200-day moving average on the Dow, the S&P, and I think you're probably going to stall right around there. I'm going to go ahead and I'm going to share the screen here briefly and open it up to some questions. Right here. Okay. If anybody, I see we got a couple questions already. Mine, right? Start. Okay. Now see if I can get to these questions real quick. Okay, this way would you have to terminate your, this way you would not have to terminate your, okay, hold it, we got some questions in here. Okay, I meant to use VoiceOver and it's not working too well. Let's see. Well, we'll take that up afterwards. We can, not seen any visual, just a splash screen. We'll take a look at that afterwards. I'm not sure why that would happen. Okay, here's one here. What sectors do you like right now? Okay, let's take a look right here. First off, we're going to look at the Excel, the materials. Got a nice bounce in that sector. Yesterday we came up we've had actually 2 good days. Actually, Friday was up despite a stronger dollar. A lot of people are looking for this thing to roll over. You're seeing some nice accumulation, though. Here's the up-down ratio, and you're seeing it peaked over here. You're seeing some more buying in that. You're up another 0.75%, or about 0.5% today. So this is moving higher. It does have some headwinds with the stronger dollar, because that will cause commodity prices to go down. You had copper making an all-time new low, or not an all-time low, but a multi-year low back at around 2009 lows. I'd be cautious on this group. I'm not sure that it has the firepower to lead. The energy also had a great day yesterday. That was on buying in the big cap oil stocks. This sector, I think you may have a little bit of a double bottom over here. That also produced a little bit, but you're not seeing the big accumulation that you would see from big institutions moving in. I would still be one that if we get some carry through on this, I'd be taking profits on this and kind of waiting to see on the sidelines. However, if we do get back in here at this level around the 62, 63 on the XLE, I think I would start to be buying some of the large energy stocks, just half positions and nibble away, because I'm not sure how much lower that has to go. The financial sector, again, was really looking good. Had a nice bullish engulfing pattern yesterday. It's also up about 0.6% today. A rate hike in December. You want to be in here. If they decide to push that rate hike off till first quarter December, you could see some selling in that thing as people wait, because what's going to trigger a pickup in earnings is going to be the spread in the yield between the short term and the 10-year. Industrials. Again, another great bullish engulfing pattern yesterday. It was kind of rolling over. I thought the strong dollar also weighs on that a little bit. You get, especially the big multinationals, a little bit of problems. You can see here as the dollar strengthened, you saw some profit taking in there, and the up-down slope was moving lower over the last couple of weeks. Technology, I like it. It came down here, never even got to test the 200-day moving average. I think that's probably another area that they did take some quick profits on the accumulation over here in distribution. But I think the technology sector will outperform going further. XLP, this is the consumer staples, another big day yesterday. It's really fallen out of bed after making a new high about 3 weeks ago. The distribution is not severe, but there's a couple stocks in there, Procter & Gamble and a couple others, I think, really kind of hit it in the dirt. This is probably close to finding a bottom. It's also a defensive sector. XLV looks like it's finding support down here at the 50-day moving average. And surprisingly, since it's September low, even despite some of the talk that's hitting the biotechs on the Capitol Hill, where they're talking about price limits and stuff in the drugs, you're seeing some nice accumulation in that. I think the healthcare sector is overdone, and you're starting to see a pickup in that. I would be buyers of some of the good, strong healthcare. Lastly, we have the retail sector, and it was doing great until last week. Macy's, Nordstrom's, Ross stores, and today Dick's Sporting Goods really got hit hard. The outlook is a little bit weak. They're blaming the warm weather up in New York and up north. People aren't buying jackets or winter clothes right now. Hopefully that's it. But it's also throwing a little bit of a wrench into the anticipation for the Christmas sales. We'll have to see how that plays out. Also on the other side, you have Walmart and Home Depot today making some nice gains, reporting good earnings. So I like that. Okay, what about the retail stocks? Again, I think they're on sale. We start getting some colder weather. Let's see. I think our RTH is the retail industry. So you saw it gap down here last Friday on some big selling. A lot of people taking profits. Good bounce back yesterday. It's up a little bit today with the Home Depot and Walmart strength. But again, you're going to run into resistance. I think it could probably come up here if the market holds up over here. It's probably a little bit oversold, but the outlook wasn't very good from some big retailers. I think that you're seeing the Amazons and that type of store where they're doing a lot of shopping online is hurting that. But if you do the Home Depot, the Costco, some of the discounts, maybe some of the Family Dollar, Dollar Tree stocks, I think you'll be fine. The big brick and mortar stores might be a little bit weak. Okay, what do you think about Intel Set? What's the symbol on that? I? We don't follow that on this, and so I haven't been following it. I don't know if that means it's a new issue or what, or maybe from a buyout, but I really can't say anything on that. Okay, someone else is typing here. Hold on one second. How about S? Okay. Here, look at Sprint. One thing I'll say about some of these telephone carriers, when rates go up, stocks like that pay the high dividend, like the utilities, the REITs, and all that kind of stuff, MLPs, they don't perform too well. I think Sprint is also one of those that pays a pretty good dividend. You're coming down here. I thought you were going to have maybe a double bottom on that. Accumulation, you've seen a lot of distribution of stock. You've had a couple of days. It's bounced over from, it was probably really oversold. Yeah, it was down here trading. Stochastics down around 2 and 3. It was due for a bounce. I don't think you're going to get much of a bounce past your 50-day moving average over here. Again, you're just the high dividend stocks don't do well, and if we get some more strong data on the economy that ensures that the FOMC meeting will get a rate hike, these stocks aren't going to get much of a bounce. Okay, that looks like that's about it. We'll go ahead and wrap it up. We will be here again next Tuesday. It might be kind of a light trading week, but again, watch today's action. When we started this, we were up about 110. And I thought that's where about as far as it would go, because that was going to represent a move up to the 200-day moving average. We're only up about 84 points now. So if today we end up rolling over a little bit and we get down where maybe we're only up 30 or 40 points, you could probably see the market go sideways to down. We had a nice bounce off of this, but until we get a little bit more economic news, I don't think a Santa Claus rally is in the cards at this point. We'll see what happens over the next couple of weeks. And if you have any questions, you can always email me later on at the doc@marketedge.com or support@marketedge.com. And if you got here late, we also have the link on the markets page. You can click and re-record this. All right, we'll talk to you next week. Have a good week.